Hey everyone, it's Rod with Power Group. Welcome back on the Pursuit of Wealth, your home for MJ Stocks, crypto assets, and interviews. Today's Thursday, June 22nd. Hope you're well. And in this video, going to go over Canopy Growth's Q4 and fiscal 2023 financial results. They just came out today after market close. And spoiler alert, they're not that great, but there is a lot to go over, so we'll jump right to it. Before we get to it though, make sure to smash the like, help support me in the channel. And if you're new, you can subscribe, take the bell to be notified on any future videos or when I go live. Very close to that 500,000 view mark on the channel as well. So thank you very much first and foremost to the community. I really do appreciate the support along the way. And then we'll jump into the chart here and give an update on the technicals towards the end as well. But lots to go over here. CGC Q4 MJ revenue drops 20% sequentially to 68.2 million. So again, not a very good start. That's just the MJ revenue, but here are the financial results. So business transformation and cost reduction actions initiated in fiscal year 2023 expected to drive overall cost reduction of 240 to 310 million by the end of fiscal year 2024. And notice here, they don't really give any of the revenue right off the bat, or they don't really talk about too much in their financial results and highlights. They don't really talk about the numbers specifically pertaining to, net loss or EPS or revenue because it's not that great. Spoiler alert. But we'll get to that in a moment. Actions to strengthen the balance sheet have reduced overall debt position by approximately 500 million from Q2 fiscal year 2023 to quarter to date in Q1 fiscal 2024 and are anticipated to generate proceeds of up to 150 million from facility divestitures by the end of Q2 fiscal year 2024. Revised proxy statement filed with modifications to structure Canopy USA in order to maintain compliance with the NASDAQ listing requirements while preserving strategic benefits. So today, Canopy Growth today it announced its financial results for fourth quarter and fiscal year ended March 31st, 2023. All financial information in this press release is reported in Canadian dollars unless otherwise stated. There was a couple comments here from David Klein, the CEO. And he said, fiscal 2023 was a transformational year for Canopy Growth as we began to implement a comprehensive strategy to accelerate our path to profitability and position our business to realize the tremendous opportunities ahead. Our actions are already yielding results, and we expect to realize significant benefits from our cost reduction program in fiscal 2024. Paired with continued progress in our Canopy USA strategy, which enables a fast start, the company is well positioned as it strives toward its goal of long-term North American MJ leadership. And we know that they're due to close the acquisition of acreage as well once federally permissible. But moving on here from Cision, PR Newswire, I just want to go in this article here as well. This is the full details. Usually the new MJ Ventures doesn't give the full details. So here's the actual full results. So again, we'll go through this as quickly as possible. Highlights. So I'm not going to go through all of this. I'll just go through what I think is most relevant. So they announced a series of comprehensive steps to align its MJ business in Canada and their operations, including divestiture of the company's national MJ retail locations, which we know, and operations, which a lot of different CEOs said that in the beginning that LPs getting into retail was the wrong approach. And so far that has shown to be true. So the restructuring steps undertaken in fiscal year 2023 reduced selling and general administrative SG&A expenses and cost of goods sold COGS by combined 125 million through the end of fiscal year 2023. Company's fiscal year 2023 net revenue decreased 21% year over year to 403 million. When adjusting for the impact of the divestiture of C3 in Q4 fiscal year 2022, our Canadian retail business in Q3 fiscal year 2023 revenues decreased 11% in fiscal year 2023 as compared to fiscal year 2022. Canadian medical MJ revenue in fiscal year 2023 increased 6% year over year, and Q4 fiscal year 2023 increased 8% year over year in a declining market. Enhanced flower quality drove resurgence of the company's mainstream Tweed brand to 9th position spot in the Canadian adult use market in Q4 fiscal year 2023, up from number 16 in the prior year. Subsequent to quarter end, the company entered into an agreement with Indiva Limited that gives Canopy control of all distribution, marketing, and sales of industry-leading Wana brands products in Canada. In addition of Wana branded gummies, it's expected to drive adjusted EBITDA improvement for the company's Canadian MJ business and advance its path to leadership in the edibles category in Canada. From Judy Hong, the Chief Financial Officer, our actions throughout fiscal year 2023 have streamlined the organization, reduced costs, and eliminated a significant portion of Canopy Growth's debt. We recognize there is more work to be done, and we have several initiatives already underway to further reduce operating cash burn in the businesses and improve our balance sheet, including facility divestitures that are anticipated to generate proceeds of up to 150 million in fiscal 2024. And here are the highlights. You can see here June 22nd, 2023, EPS came in at negative 0.19. I'm not sure where they were getting that, but that's incorrect. And then it says net revenue of 88.91 million. So the forecast was negative 0.205, and forecast for revenue is $86.32 million. I'm just going to remove that highlight here and so that it lines up perfectly. There you go. So we did beat in terms of revenue estimates. It was only expecting 86.32 for their whole, for all lines of business. But again, that EPS is incorrect. I'll just scroll down here real quick, make sure I don't lose my spot here. But if I go down, you can see here that it shows that at the bottom. So it was actually basic and diluted loss per share was 1.28, negative $1.28. And if you just take the calculation here, you take the loss. So net loss attributed to Canopy Growth Corporation, $640,080,000. So you do $640,080,000 divided by the outstanding shares, 498,778,062, and that gives you negatives 1.28. So not sure why. Sometimes they're pretty inaccurate, especially whenever these results just come out. I was surprised actually that they even had the numbers there, but yeah, that's incorrect in terms of EPS. But we'll go back to where we were from the CFO comment. So BioSteel review and remedial actions. So the video is already getting pretty long. So if you want to learn more about this, I highly encourage you to check out this on your own time. But I'm not going to go through this in effort of time. I want to keep it down to around 10-15 minutes if possible. But yeah, they identified certain trends in BioSteel sports nutrition business unit, and they're going to, with the oversight of an audit committee, will launch an internal review together with independent external counsel and forensic accountants. So the review was misstatements in certain of our prior financial statements released to certain sales with respect to the timing and the amount of revenue recognition. The review also identified material weaknesses in the company's internal control over financial reporting as of March 31st, 2023. Overall, the correction resulted in a decrease of approximately $10 million in net revenue of fiscal year 2022, or approximately 2% of total net revenue for the company. As a result of the review, we are continuing to implement several remedial actions, including management changes, appropriate personnel actions. So company is considering all legal options as well. And we'll continue on. So Canopy Growth has taken decisive actions to sustain growth and improve profitability of BioSteel, including exiting all BioSteel international business, prioritizing resources toward the growing Canadian market, and refining our market strategy in the US, and changes to BioSteel business, including cost reductions, warehousing, production, product sampling, and overall staffing reductions, and exploring additional options to further minimize operation cash burn. So balance sheet and liquidity. Company ended fiscal year 2023 with cash equivalents, and short-term investments of $783 million. Targeted actions that have been completed or are currently underway to further strengthen our balance sheet include reduction of approximately $500 million in debt from Q2 fiscal year 2023. And again, if you want to see all this information, I highly encourage you to check it out, but I'll just give you some highlights here. Refinancing $100 million of the 2023 notes held by Green Star Canada Investment Limited Partnership, wholly owned subsidiary of Constellation Brands, in order to extend the maturity date to December 31st, 2024. So fiscal year 2024 outlook and priorities: achieving break-even to positive adjusted EBITDA in all of our businesses with the exception of BioSteel by the end of 2024, strengthening our balance sheet and improving liquidity, and that's fiscal year 2024, mind you, and monitoring and supporting the creation of value in Canopy USA LLC. So here's the financial summary. So as I mentioned, reported net revenue $87.5 million and net loss of $647.6 million. And then for the year, $402.9 million net revenue and a net loss of $3,309.5 million. Wow. So free cash flow negative $566.8 million. Go through this a little bit quicker. So EBITDA for the quarter was negative $95.6 million, and for the year was negative $349.7 million. So it's definitely not looking good. We're going to be at least into 2025 before we see positive adjusted EBITDA. Like I said, maybe even break even in 2024, but I don't think there's any clear path to that before 2025. Bearing, any unforeseen catalysts, federal legalization in the US, that all will obviously change things. We'll go through this here, wrapping up. So business highlights: transformation of the Canadian MJ operations. So it's closed 10 production sites in Canada and is on track to end production at one of its Hershey Drive, Smith Falls, and Ontario facility by the end of Q1 2024. Cost reduction initiatives undertaken in fiscal year 2023 are on track to reduce company's headcount by over 1,200 positions. And during a year of significant business change and continued market fragmentation, Canopy Growth's Canadian MJ business stabilized and that was exiting in fiscal year 2023. 2024 fiscal year 2024 focus on continued stabilization of Canadian adult use MJ business, expected to be driven by new high quality flower and pre-roll joints, as well as stronger edible portfolio. And speaking of which, this reminded me of this article. Canopy Growth expands flower portfolio in time for summer. So they got this Highway, 7 Acres Craft Collective, Doja, Tweed. You can check that out as well if you want to know more on that. Focusing BioSteel in North America, advancing innovation at Stores and Bickle to drive growth, which has their their paraphernalia and their different vaporizers, things like that, their volcanoes. So it talks about strategy advancing in the U.S. MJ market. U.S. companies continue to strengthen and expand their businesses. So it just goes through some of the summary here. Net revenue, like I said, $88 million, declined 14% to Q4 2022. Through gross margin for Q4 fiscal year 2023 was negative 103% as compared to negative 166% in Q4 2022 fiscal year. Wow. Let's go through this a little bit quicker here. Pretty much all of this I've already gone over. Yeah, free cash flow in Q4 2023 was outflow of $143 million. A 13% increase in outflow compared to Q4 2022 fiscal year. Already mentioned the cash position. So this is their revenue by channel. So for Q4 fiscal year 2023, business to business, 21.6 million. Business to consumer, 21.6 million. Medical MJ was 14.1 million. Let's go through here. Rest of the world, MJ was 8.8 million. Stores and Bickle, 15.5 million. BioSteel, 19.3 million. This Works, 5.4 million. Other, 2.8 million. Net revenue, 87.5 million. And by the way, that is their lowest revenue since 2019. So that's the lowest. Yeah, so when was it? November of 2019, the lowest we've seen. So we're going back in a time machine. That's generally not what you want to see for companies looking to achieve long-term staying power and growth, right? So it basically goes over the Canadian MJ landscape, rest of the world, Stores and Bickle, and then there was the conference call that occurred at 5:30 Eastern Time. I didn't actually join that. Didn't have time to do that, but if I can listen to honestly, I'm not really too impressed with these results, and pretty much everything that I've seen, I can pretty much put together, the fact that it's going to be at least 2 to 3 years before we see any major, profitability changes. And, Canopy Growth is one of those names that I've been very reluctant on. I've been very, very slow to add it to my portfolio. It only accounts for, I would say, probably 5%, maybe even less than my whole MJ portfolio. I might look to ramp that up. I do think they're going to stand the test long term. I just think they're too big to fail. They have Constellation Brands backing them, and BioSteel is a great brand, and all these brands similar to Tilray. Once the U.S. legalizes, it's going to be an absolute powerhouse. And with Acreage, Wana Brands, and all their other brands as well, I think they're going to be great long term. But like I said, I'm not too concerned until the end of 2024, probably in 2025 is where we're going to really start to see the financials turn around, right? But Canadian recreational MJ sales grow 1.3% to 411.7 million in April. So that's good to see some changing there and momentum shift there. We are down about almost 5% here after hours on CGC, so sitting at about 57 cents. But the low there was 56 cents. And I'll just bring up the chart here real quickly. So we had some massive bear flags. We had monthly bear flags, we had weekly bear flags, we had daily bear flags. We're getting very close to monthly oversold, so we're pretty much at that monthly oversold territory now. And then we did have record monthly volume back in October of 2022. So one thing I want to bring up here is the fact that we had a monthly bear flag, weekly bear flag, and daily bear flag. And the weekly bear flag, if we take the high to the low here and move it out to the 0.382 fib, you can see here we were targeting about 60 cents on CGC. And then we even had a daily bear flag to add to that confluence. So we had more and more indications that we were going to that level. And if you take the low to the high there, move it to the 0.382 fib, again, it was saying down around 60 cents. And we actually dropped below that. So when we have these targets, whether it be from bear flags or bull flags or head and shoulders, inverse head and shoulders, these are just targets, right? And they're not to be taken 100% accuracy. It's just, probability and odds of us going there. And just because we have a target doesn't mean we have to hit that target exactly, or doesn't mean we're going to stop exactly at that target. Sometimes we can extend it. Sometimes we come very shy of hitting that target. Sometimes we overextend it. But it said we were targeting about 60 cents, which I've been warning about for a while now. And here we are down below that with a low of 56 cents. So next support on deck would be there at about 50 cents, psychological. And then, yeah, it's definitely looking like we could be potentially nearing a bottom here with monthly oversold territory approaching and those monthly, weekly, and daily bear flag targets being met. So that is a positive sign out of all of this, but yeah, it's not looking good. This is definitely one of the uglier charts. Especially all MJ pretty much looks the same, but down over 99% from February 2021 highs on CGC. But I do think this is going to be a company that'll stand the test long term. But we're not looking good here. Even the weekly time frame, we're well below the 10-week moving average. We're bearish on the stochastic and the MACD, nothing to see there. Well below all the weekly moving averages and the daily moving averages as well. We're likely multiple months, I would say 3, maybe 4 months away before we see a golden cross. And I would like to see golden crosses across the sector with the 50-day moving average below the longer term, the 200-day moving average. When that happens and they cross, that's called a golden cross. You can see here whenever the last golden cross happened, price was at around $17 and we went all the way up to around $60. Then we had the opposite occur, a death cross with the 50 above the 200 it crossed. Price was at around $25, went all the way down to below $1. So we'll see if we can get a golden cross over the next few months, but we got at least 3 or 4 months of work to do, in my opinion, before we can be confident that a bottom is in. But like I said, next support to be watching would be 50 cent psychological USD on the NASDAQ. But like I said, lots of work to do for MJ and specifically CGC. I'm not expecting any major financial changes in regards to profitability until late 2024, but I would say more than likely in 2025. But MJ is all struggling right now. It's not just CGC, but I do have CGC Canopy in my long-term portfolio, and it's one of those investments where I'm okay with going to zero, right? The money that I put in there, it's not a lot of money. It's only, a fraction of my MJ portfolio and my net worth, less than 5% of my whole MJ portfolio. So I'm okay with that, just holding it long-term and slowly dollar cost averaging into that one. And I was very patient on Canopy Growth as well. I was very late adding that to my portfolio and just not throwing a whole lot of dollars at it. But we're at a point now where, down over 99% from all-time highs. Definitely one of those opportunities that I think that has some great reward versus risk. So going to end it there. Let me know what you think of these results in the comments below. Always love hearing from you. We'll continue the conversation in the comments section below. But going to end it there. Thanks again for joining us in the Pursuit of Wealth. It's Rob with Powell Group. Smash the like, share the video with anybody that might find value, and we'll see you on the next update. Take care.